The Federal Reserve has cut interest rates for the second straight meeting in a row, but markets are selling off. And it all comes down to Powell's statements. In this video, we're going to break down what did he say to make markets so bearish? What does it mean for the December meeting? And what can we expect for the rest of 2025? If you're excited to learn more, like and subscribe down below, and let's hop in to the latest FOMC. Now guys, as you know, we had an FOMC meeting yesterday where Jerome Powell came out and gave another 25 basis point cut. But the problem is that markets are selling off. Now why is this? What Powell delivered was known as a hawkish cut. This is where the Fed gives a cut, but they do it almost begrudgingly. They do it to help the labor market along, but inflation is still a problem, and the labor market's not in serious dire straits, but it's still bad enough to warrant a cut. And so Powell came out and really just wanted to be hawkish, essentially. He also told us that cuts in December were not a foregone conclusion. And this is really what's causing the pullback on markets, is because we had already priced it a 25 basis point cut in December. And so when Powell came out and said, hey, don't count on it in December, markets priced that in. We go down for price. Now, it is going to be data dependent. As they've communicated in the past, they're going to have to wait to see what the data tells them. Right now, the Fed is flying blind. They don't have Bureau of Labor Statistics data, that's government labor market data. They don't have inflation data from the government. And so they're forced to rely on private data and some of their own models, but it's not the gold standard. It's not the gold standard of what they have. I think Powell just wanted to put some cold water on the December cut. Now, experts are weighing in on both sides of the argument. Some think that he's going to cut in December, that this was just, a precaution, just put some cold water on it, hold your horses. Some people think that no way he cuts in December, inflation's still too high, labor market's actually not that bad. Overall, he just wanted to be hawkish. And so I've got David Zervos here. He was actually a potential candidate to be the new Fed chair next year. He's no longer on that short list, but check out what he has to say about Powell's tone yesterday.
I don't think anything in here was a big surprise other than Powell came out really wanting to be hawkish. I just felt like from the start, we are not on a preset path. We are, we are strongly disagree. The committee's got strong disagreements. It just felt like he really wanted to make a statement that we shouldn't take December or anything in the future that serious.
And so that's the message Powell wanted to send. Now you can make an argument as to why he did this. Did he do it because he just wants us to be cautious and not get too ahead of ourselves? Or is there actually something to be concerned about when we might not get a cut in December? Well, again, it's going to come down to the data. It's going to come down to what did the labor market do and what does inflation do? And so it could go either way. Experts are torn. So let's hear from both sides of the argument. We got Mike McKee here from Bloomberg. He's going to break down why he thinks there won't be cuts in December. Have a listen.
Well, I think the absolute takeaway is that the Fed is probably going to pause in December unless there's some data that forces them to do another cut. There was a sort of almost Freudian slip by the chairman close to the end of the news conference when he said, if we cut again. And then he quickly backtracked and said, we will at some point. But I think that the mood of the committee now is we've done enough. Let's sit back and see what happens, especially without any data. And given the fact that inflation is still rising, you noted at the beginning when he was giving us the rundown of the economy, he said extrapolating the CPI into PCE suggests that it rose at 2.8%. Well, it was 2.7% in the prior reading. So it just shows you that inflation is still rising at a time when he had a hard time making a case that unemployment is a real problem. So I think the takeaway is don't expect much from the Fed in December unless the government gets back to work and we get some data that change their mind.
And so there you have it. The Fed likely largely data dependent. Me personally, I think the labor market is cooling sufficiently to warrant another cut. I don't think that inflation is going to really stop them. In my personal opinion, I think there's been somewhat of an unofficial, unannounced acceptance of a bit of a higher inflation target right now. Some people going so far as to call the 2% inflation target arbitrary. If you've been subscribed to this channel, I've shared clips from Darius Dale and various others saying that they think the 2% target is actually outdated, doesn't actually do much to serve the Fed's interests. And so on the other side of the argument, making the case that the Fed will, in fact, cut in December, I've got Alex Morris, Chief Investment Officer at FM Investments. Listen to his take.
But the Fed's motives have now changed as the risks have been more balanced, and now the need to prop up a potentially cracking labor market has just outweighed any effort that the Fed has for a terminal 2%, which, by the way, the Fed has always been shooting for 2%. it has a hard time sticking that landing. It's always a little bit high or a little bit low. Janet Yellen ran the economy hot, as we called it. And here, I think it's going to make some sense for the Fed to really start considering other factors. And inflation is difficult. Mass unemployment is deeply unpopular.
And so there's the other side of the argument, that the labor market is sufficiently cooling, that inflation isn't that big of a deal, 2% target isn't very realistic. So what does that mean for us? We got this guy saying one thing, we got another guy saying something else. Why do we care? Where do we come in? Where do crypto investors come in? Well, obviously we want the Fed to cut rates, and we want to use the information that we can glean regarding whether or not they might cut rates in the future to either maintain our conviction or start to think about maybe the future's not so bullish. Me personally, if you're subscribed to this channel, you know that I'm very bullish on the rest of 25 and 2026. Ultimately, it really doesn't matter what Powell says. How much longer does he have? It's already November. He's gone in May. That's 6 months. That's half a year. And we've been waiting for years already. I think we can do another half a year. I can do that standing on my head. And I want to show you another clip from David Zervos. He's going to break down what I'm thinking, and then I'll talk a little bit more about it. Have a listen.
I feel like the market kind of yawned. It was sort of like, okay, you're hawkish, but you're gone in May. So maybe it's not that important. And I feel like that's the summary of what I saw today.
Okay, so how does that set us up for December and perhaps more importantly for 2026 now?
I think that's where the market's focused. The market's focused on the fact that this committee is going to do a lot of changing. It could go in a lot of different directions in the next 6 to 9 months. It's going to be, I call it a more cooperative committee. Some people call it a more dovish committee. Some people might call it other things. But I think it's going to be less of a headwind, more of a tailwind, probably take a little bit more risk with inflation and focus a little bit more on some of the jobs data that look somewhat unpleasant when you dig a little deeper.
And so David said it perfectly. Even though we did see a little bit of a sell-off in crypto, nothing drastic, nothing dramatic, wasn't pleasant, but it happened, and it's pretty much behind us. I think markets have pretty much stabled off. The market did kind of yawn because we are looking ahead to 2026. And the closer we get to that date, the closer we get to Powell being replaced, the less and less his statements are going to matter. So right now, he might not be our favorite guy. He's hawkish. He nuked the markets. He's bad for our bags. Let it roll off your shoulder because he's going to be gone pretty soon. And I bet you that Trump is going to come out and announce his new Fed chair candidate probably sometime around February or March. And so when Powell gets up in front of the world and speaks, the next central bank chair is going to come out and say something probably completely different. And that's who markets will start taking their cue from. And that's what I'm focused on. I'm not focused about what's going on right now in the present. I'm focused on what's going on in the future because that's where the gains are. In my opinion, I think 2026 is going to be a fantastic year. See, our video that we did about the cycle running into 2026, fundamentally what causes bull markets is still the same. It's just been extended because of COVID. I think I make a pretty compelling argument in that video. Check it out if you want to learn more. And if you want to continue to learn more about central banks, about macro, and about crypto investing in general, you got to like and subscribe to the channel. Leave us a comment down below. Let me know if you've learned anything. Let me know if you're bullish or not on the 2026 new Fed chair and what you think is going to happen with that. And as always, thank you for being here, and we'll see you in the next video.